with the way this is looking, that you're either headed for some kind of event now or potentially starting like June 1.
Boom shakalaka. Today's video, I'm joined by Bill and Jed from Token Metrics, and we're going to be going over not only some new features added to Token Metrics that you definitely have to check out, but what is going on with the market, particularly which direction is it headed, when, and what factors you need to keep an eye out for. You definitely want to stay tuned. All right, Bill, Jad, welcome to the channel. We have an exciting video today. We are going to be talking about the markets, and also we're going to be talking about the markets page. So welcome.
Hi, thanks for having us.
Hi, thanks for having me.
Yeah, so I mean, it's turbulent times with Bitcoin and cryptocurrency right now. I mean, we were just touching on this briefly. What's going on?
Well, there's two things happening. One is you've got 6 or 8 consecutive down weeks happening, depending on what coin you're talking about. So you have a deeply oversold market, and that should be constructive, right? Well, we've got some research from 2014, and believe it or not, we've actually got some quant work, some advanced quant work that we can summarize that gives you information about how 1929 happened. So if you wanna stay tuned to learn how to protect yourself, you know, Jad's got some cool stuff on a new token metrics feature that could give you some more details, and then we'll give you that juicy ending when Jad's done showing you all the new features on token metrics.
That sounds good. Jad, what are these new features?
All right. Yeah, we'll do. So this is essentially a new page on the Token Metrics platform where, like Bill said, we want to show the overall market. So we have a lot of insights from data that we work on in Token Metrics, whether it's from the quant team or data science team. We have a vast amount of data that we want to get insights from. So we all know by now, I hope most people know the TM grade that's been working pretty well for token metrics. So what we wanted to do is leverage this TM grade that's built using some machine learning models to be able to determine where we are in the broader crypto market. So this is the page where you can log in here, and the analytics tab, there's a market tab. So it's the market page for token metrics. So when you log in, you quickly see our token metrics market indicator. So this indicator is very useful in terms of determining are we most likely in a bearish or bullish regime, because we all know in a bullish regime we are more likely to make money when we are long, and in a bearish regime we are more likely to make money when we are short or hedge our risk or be in stables and stuff like that. So this chart here is the total crypto market cap, and then we are just putting in our trading signals based on the TM grades. So just quick explanation about how we made this is essentially we're looking at all the TM grades we have on the platform and trying to determine how many have a bullish TM grade compared to how many have a bearish one. So when you have a lot of TM grades that are bearish, like recently here, you can see all TM grades are pretty bearish, then we will be more confident in a bearish signal on the total market. So as you can see here recently, at the market top, we had our first bearish signal at 2.8 trillion. And then here, more recently, we had a bullish signal at 2 trillion, where we had a lot of altcoins really pumping very strongly, but then rectified itself very quick at 2.1 trillion to flip back to a bearish regime. And usually in bearish regimes, like I said, you are more likely to make money when you are short than when you are long. So this helps you, first of all, identify are we in a bearish or bullish regime, and it also helps you switch between your strategies. Should I be long? Should I have a lot of risk right now, or should I reduce my risk, or should I start considering short positions? Now, obviously, I want to say that this is not an indicator that will catch the exact top or the exact bottom, but it usually waits for a bit of a confirmation and confidence in your signal before going and giving that bullish or bearish signal. So that's probably the most important feature on this page. Really easy to see, quickly understand, okay, are we in a bullish or bearish market? What type of strategies should I consider? And in addition to that, we also provide some additional analysis, like how many coins have a bearish breakout strategy or a bearish bullish low frequency strategy. So here, obviously, in all these features, they might be a bit complex at first, but you can read the description. It explains everything. Just quickly, the breakout strategy is very simple, just looking at how many coins are trading above their monthly high and how many coins are trading below their monthly low, to be able to determine, are we more in a bearish regime or bullish regime as well. And here is a similar indicator. Here's more of a medium-term trend analysis, because we're looking at how many coins are below their 60-day exponential moving average and how many coins are above. We did some tests and found that 60-day EMA works pretty well in determining the medium-term trend, at least, of them. So here, we start off with individual coins. We get their signal, and then we combine all of them to see what is the broader market feeling right now, essentially. Yeah, and here is another chart, total crypto market cap, simple. We're just plotting the total market cap compared to Bitcoin and altcoin market cap. Now, the reason I like this is because it can help you understand and see visually when altcoins tend to outperform Bitcoin. Is it in a bull market or a bearish market? So here, the green and red areas are essentially these signals overlaid over the time period. So for example, here, during this bearish market, we can see that altcoins did suffer much more than Bitcoin. So it helps you understand, okay, in a bear market, Bitcoin tends to outperform, and in a bullish regime, altcoins tend to outperform Bitcoin. So this visual helps you understand that. And to complement it, we have our Bitcoin altcoin season. I know you guys remember this market cycle where we used to have Bitcoin initially pump, people take their profits, move them to altcoins, and then you have altcoin season, and then the cycle keeps repeating. So this is inspired by that. And it's very simple to follow. When the indicator is in the red zone, usually Bitcoin is more likely to outperform altcoins, and then when it's in the green area, altcoins are likely to outperform Bitcoin. So this helps you know, okay, should I play it safe, put more money in less volatile assets like Bitcoin, or should I be risk on and move my profits from Bitcoin or the big coins into smaller altcoins to capture these big up moves? Yeah, in addition to that, we also provide annualized historical volatility. You can think of it as like the VIX of crypto, or like a fear indicator, because it just tells you how volatile we are compared to history. So for example, here during the top in May, you can really see the yellow, which is the volatility metric, being extremely high compared to history. And these red lines are essentially the 90% cases of volatility historically. So basically, when we are outside these bands, it means that this volatility is higher than 90% of the past. So it shows that we are in a very high volatile environment here. Recently, we passed it. So what we've been seeing for the past couple of weeks is actually higher volatility than 90% of the past in crypto. So it tells you the amount of fear there is in the market based on returns from the total crypto market cap. All right, and lastly, this is a nice feature as well. I like it. It's a sector analysis. So here, for each one of these sectors, we actually went out and built a TM grade for the sector. So this will help you understand which sectors are breaking out, which sector are recently having big moves and are likely to keep pushing on the upside. Now, obviously, in the current market, most of the TM grades are very low. Even the sectors have very low TM grade because we're likely in a bearish regime. But also this feature lets you quickly see, okay, what is the best performing coin up to today in that sector. For example, Kyber Network has been performing pretty well, and it's in multiple sectors, so you can see it multiple times. We also have what is the total market cap of this specific sector to try to see, okay, if that sector were to reach this sector, what kind of returns can I expect? And then what is the trading volume of that sector and how many coins within the sector are up today compared to are down today. Now, obviously here you can see that most of the coins are down today and most of the sectors. So that's the overview of this new page. I hope you guys like it. I think it's very useful, and we're adding up more features as of later today, like what are the top 20 gainers and losers for the specific 24 hours, and also what are market movers. And when I say market movers, it's just a scatter plot showing the daily percent change compared to the change in volume, because it's a very nice plot. It shows you if a coin had a high return, was it also did it also come from a high increase in volume? Because usually if you see a coin that went up a lot and volume also went up a lot, you can see that, okay, there's strength behind this move. So these new features will help understand more what is happening in specific cryptos and the market as a whole.
Awesome. So that looks like it's a really nice addition to token metrics, because now you can have a nice overview of the entire market. And I got to say right now, a lot of things look pretty bearish.
Yeah, the trend has been bearish. So the most recent bearish signal we got was on April 9 at 2.1 trillion when the total market cap was 2.1 trillion. Yeah, and as of right now, it's around 1.4, 1.3 trillion. So that was a pretty good time to reduce risk, move to stable coins, or start shorting. So you see how this can quickly help you understand, should I start switching strategies and not? And an additional part that we added, so since this is based on TM grade, I also wanted to show you guys that we added for specific coins like Terra or any other coin for that matter, we are showing the TM grade compared to price plot. So here you can see, for example, that Terra and last summer 2021, it had a very high grade in the 90s when the coin was trading at around $8 or below $10 and remained very high until the coin was trading around 30 or so. And you can also see here how the coin was high during the uptrend. And most importantly, very recently, you can see that TM grade was in the high 80s when Terra was still trading in 110. But you see how it really went down very fast, went to a grade of 30 when Terra was trading at 82 and remained pretty low throughout this time. And then obviously we all know what happened to Terra after that. So this new visual also helps in understanding, should I stay in this coin? When should I exit? When should I go in?
That's a really awesome thing, because that's something I've been wanting to see for quite a while, is just the TM grade over time, so you could have a better idea of how the coin's doing. That's awesome.
Yeah, exactly. You can see, and you can also learn more about how the TM grade works, because like no model is perfect. Obviously, you can see how in sometimes it won't come down in the right time, or maybe here you'd have rather the TM grade been high here, but we wait for confirmation to be more confident about things. But the big trades like this one here, where you would have been able to get out of Terra at above 80 or so, that would have been pretty nice. So this shows with transparency how TM grade works, so that our clients can use it better and can use it at their liking.
Awesome. Well, cool. I will put a link down in the description to Token Metrics, a discounted link, as a matter of fact, so that anybody who wants to can check this out if they're not already taking a look at it, or if they already are using Token Metrics. Can you just show them again where to find it in the menu so they can start using it?
Yes. So, okay. So for the market page, when you log into Token Metrics, you go to Analytics, and you can just go to this tab here, and then it will take you to the market page, all the analysis on the total crypto market cap. And if you want to see for specific coins, you can just search any token you want, and then you'll be able to see the chart of price compared to TM grade, and in technical analysis, you can see more of our signals like low frequency trend and things like that.
Perfect. Awesome. Thanks, Jed. And so now, Bill.
Yes.
I mean, we have some crazy. Okay, so taking a look at the markets page, a lot of bearish signals.
Right.
Taking a look at just charts and things of that nature, a lot of bearish signals. What's going on?
All right. Well, bigger picture, and you can see this when you look at that indicator that aggregates all the AI grades for all the coins and then gives you one red or one green dot. If you look at it closely, it's going to teach you three things. One, beware of the failed rally, right? Beware of when it goes green and then quickly turns and goes red. Two, don't feed the bear, right? That meaning after it goes red, if there's like a FOMO short squeeze, don't buy in at the top, right? Because when it turns and goes down, there's no bids after the shorts cover and retail FOMO's in. And then three, don't turn your back on the bear, right? When that signal is red, right, and then it actually gains momentum, people think, oh yeah, it's capitulation, it's over. It's not.
Mm-hmm.
Now, if you flip over into the current market, you're like, all right, guys, yeah, thanks a lot for telling us we're in a bearish environment, but wait a minute, okay? If you go back to the history of equities, when things get really oversold, right, where it's like, oh yeah, this can't go any lower. When it gets deeply oversold, that's when your 1987s and your 2008s and 1929s have occurred. Like with RSIs, or like our readings are more sophisticated, when RSIs are like really low, like 20. We also went back and looked at 2014, right? You had this on your show. You actually had the call. When you have anywhere from 6 to 8 down weeks, the last time you had that was back in 2014. And right around week 6, it when crypto eventually snapped, Bitcoin went from 500 to 175 over like the next 6 months, right? So it's down, but when it's down and it like stays down, right? And even our volatility indicator shows that, volatility will spike up, but then it takes a while for the market to like collect itself and eventually bottom. Now, in this case, if you look at Binance, you look at Bitcoin on Binance versus Tether, right? We're actually not on week 6. We're now up to week 8. Now, why does that matter? Well, we've got some advanced quant work, right? Historical work that shows that back in 1929, it took 8 consecutive down weeks, right? And then that's what triggered, the big event that eventually hurt the economy. So I'm guessing with the way this is looking that you're either headed for some kind of event now or potentially starting like June 1. So everybody may be a little bit scared and everybody may get short at the bottom and long at the top in a confined range. But if you look at like the 2014 stuff and you look at this like 6 to 8 down week thing, right? It's scary. I mean, we definitely need an up week, right? A strong up week, a green candle in either equities or crypto. So maybe we can stand down on this. But like if you have an adjusted risk, I think there's one key takeaway. Like most people are saying to themselves, well, I'm already down 60 or 70%. I'm just going to leave it. I'm not going to adjust my risk. Okay. Well, I would encourage you to rethink that between now and the end of May, right? Because, the only thing worse than being down 50% is being down 95%, right? Because what that does is that keeps you out of the next crypto move. That creates what we call revulsion, right? That's what people who didn't get out of Luna at 80 are currently experiencing. And we don't want that to happen to you. So, that's the sort of 2 cents technical view. Beware the oversold market would be the 4th axiom I would, add to all my trivia about bears.
Yeah, I agree with you there. I was just looking at a chart today with the weekly moving averages, And historically, Bitcoin has crossed below the 100 weekly moving average 3 times in 2014 and 2018, and also in 2020, the COVID crash. And every time it dropped back down to the 200 weekly moving average. COVID, it went below there. But right now, the 200 weekly moving average is roughly $22,000. And it's kind of like these mind game things you play with yourself, because everybody's like 20,000. That was the peak in 2017, 2018. Bitcoin's never broken below a previous peak. Like, what happens if Bitcoin goes to 18,000? I mean, these are the things you think about. If Bitcoin goes to 18,000 or $15,000, because we have that double top, the giant double top right now, that's saying $15,000. Ooh, confidence gets shaken.
Right. And I have seen big hedge funds put out, what seems obvious, that, Bitcoin's never really been below the 200-week moving average for very long. And as soon as I see a big hedge fund put that out, because, Benjamin Cohen and a lot of these really advanced math guys, they've noted these things, right? And they've noted these things to a point where, I'm sort of wondering if retail is going to try to catch the falling knife at the 200-week moving average. And the reason the hedge funds are bringing it up is because they know retail is going to line up to bid at 22 or 20. And heaven forbid, but these big hedge funds may use all those retail bids as what I call a liquidity event, right? The little guys are like, oh, I want it. The big guys come in and go, right? Fill everybody. And then, you have some sort of shocking move to 14. Like the way this might go is, and this is what happened in 2014, right? Hedge funds fill all the big bids at 20 something, make everyone panic down to 14. Then there's some sort of humongous bounce to 28 after everyone panics. And then, there's maybe another leg, maybe at July 4th, if Mr. Putin mails the West a present. I'm not sure what that is, but you got to get
Caviar.
ready for some.
I'm sure it's just going to be caviar.
Oh yeah, absolutely right. He's such a nice guy, right? So I mean, you have to be mindful of events. And I know the equities guys this morning they're all filtering out like some sort of analog or fractal of like 2008 versus today. So there isn't going to be a shortage of scary stuff. And I think the net is, it's not too late to protect yourself. And even if your portfolio's destroyed, well, you don't want it to get more destroyed, and you don't want you to get your head out of crypto, because there's probably going to be a humongous bottom in the fall. And you want to make sure that, you've got the capital and the mindset to jump in at that point.
Yeah. Yeah, so let's talk about timelines, because I'm looking at previous times that we've been in this situation. And I know history doesn't repeat itself. Sometimes it rhymes, but then again, Bitcoin's never been in a recession, so we don't know what we're talking about at this point. But historically, we're looking at like 6 to 12 months that it takes Bitcoin to recover in the bear seasons. Now, with everything going on economically, globally, where it is right now, could we see some type of event that's longer than that? Could we see multiple years? Is that something
Right. Yeah,
you've
no,
seen
it's a good
talk about?
it's a good question. So everyone, like when it goes down or people get depressed, people go, it's crypto winter, right? And there's some validity to that argument, right? Like people are saying that with the Luna ecosystem, with the margin and the credit, it's a shock of anywhere from 70 to $200 billion worth of bye-bye in terms of, equity, margin, defaulted loans, whatever. So people say that's an argument for winter. My argument is different. People go, this is a bear market in winter. I go, no, this is a crash, right? This is just a good old-fashioned crash, and we're winding it up, right? Terra Luna was Bear Stearns from 2008. That was the first investment bank to go down. I'm not saying projects are going to go down like Luna did, but when you have a crash, you have down, violent squeeze, down, despair. It's never going up ever in my lifetime. Crypto's going to zero. And then say in September, or, you may have Rectember but then October, there should be a bottom. So I don't think it's a 15-month winter. And here's like the reason why, right? Right now, the dollar's going up because everyone's afraid, right? That's what everybody does in legacy when they get afraid. Well, eventually that's going to end, right? And someone's going to go, why are we buying the dollar again? Right. And then that's when crypto recovers. They go, oh, the dollar's horrible. This is why I want to buy Bitcoin at, I don't know, 7K, 10K, 14K, wherever the avalanche ends. So when the Bitcoin panic ends, that's when the panic switches over, I think, to a dollar top. Now, God knows how high the dollar has to go before that ends, because, you know, there are some problems with the euro and the yen, and we won't go into all that. But, you know, I don't think it's winter. I don't think it's one of these things where crypto just goes down and stays there for 18 months, because I think there's still a case for crypto. And this has been true throughout history. Like, look at the internet stocks. Like at the top in 2000, right, Amazon would have had to sell every book in the world 1.5 times in order to justify the price. Then it went down for 2 years. And in 2004, no one wanted to touch the Google IPO. Like Warren Buffett's like, oh, I'm not touching it. Okay. So, you know, the unbelievable revulsion that occurs after a crash breeds the opportunity. And I don't think that leads to a winter. I think that leads to a fast rebound, like a V bottom.
Okay. Now, do you guys have any type of insight from looking at everything in token metrics, altcoins versus Bitcoin, or smaller altcoins versus Bitcoin? Because a lot of people, I think, are kind of stuck in positions with a lot of altcoins potentially. And they're always like, oh, do I sell? Do I hold? Should I just hold all the way through? Do I sell? Me personally, I always refer to like a Willy Woo chart of Bitcoin versus altcoins, but I won't go into that at the moment. What do you guys have to say?
So for me, okay, so the new market page definitely can help answer that, because from the charts I just showed, we already see from data that during bearish environments, altcoins tend to underperform, and the losses, the daily losses, and the magnitude of these losses is much bigger than the daily loss in Bitcoin or Ethereum, for example. So we already know that during these bearish environments, altcoins tend to get hit much harder than Bitcoin. And there's something that's very simple, but intuitively, it's very important to know that if a coin loses 70 or 80% of its value, it could still go down another 70 or 80% of its value. And that's very important to just really understand, because the name, me personally, I believe the name of the game should be, I want to survive until the big leg up comes so that I'm ready to deploy my capital. So if you want to just keep surviving until you see this market change, you need to manage risk very well. And that sometimes means to cut losses. Even if it's a 20 or 30% loss, sometimes you need to cut it so that you make sure that tomorrow you're back, and if there's a leg up, you can participate in it. So yeah, but this page that we just launched will definitely help you understand, okay, should I move from these more speculative small altcoins into the bigger, more stable or less volatile coins like Bitcoin, Ethereum, and so on.
Awesome.
Yeah, and I think for altcoins, right? Look, if you went to the casino and you rolled the dice and you lost, or you know, your mom caught you with your hand in the cookie jar and you just goofed. Look, man, you got something in common with every trader in the whole world, right? If you bought the high and sold the low, that's happened to even the greats. All right. So call your accountant and ask him about tax loss selling, not tax advice, right? The other way to think about it, and this is what I'm doing, is we're actually combing through the micro cap universe, because, you know, whatever's going to go up after the next V bottom in September may actually start going up beforehand. You don't want to buy it in the middle of a 1929 event, but there's going to be green shoots popping out of the ash. and they may actually they may pop out of the ash now, especially if you're looking at micro caps. So you're going to have to do your homework. But rather than spending energy of should I hang on, be honest with yourself. And then somebody asked me a very important question in one of our premium webinars. They said, what are going to be the 5 big coins? What are the 5 big coins for the next 5 years that become the new FANG? Facebook, Amazon, Netflix, Google, etc. And my comment was they haven't been invented yet. They haven't been invented, or they are, and they're like hidden micro caps. Because remember, 2017, Chainlink, Cardano, Synthetics, they all went to zero. I know people who bought that stuff that, they put it on some wallet and they couldn't find it. That's how bad it went to zero. So, there's small cap stuff out there that's going to recover in September. Use token metrics or use whatever homework machine you got or method you got. Listen to Crypto Love, right? Find those small cap gems that are going to bottom in September and put your focus on that rather than the trade that you did that didn't work out.
That's great advice. Yeah. I mean, everybody loses money. It's just tough to deal with, but I think being in a good spot and managing risk is definitely important. I'm curious, do you have any recommendations for books or anything about managing risk? Because a lot of people say manage risk and deal, but like what resources can people look at for how to find methods to manage risk?
Well, I mean, for me, it's Truth of the Stock Tape by Gann. It's not an actual risk management book, but it actually talks about how he navigated the market with basic support and resistance, and maybe talks about stops. So if the best investment portfolio is the one that helps you sleep at night, that basic book, like going back to the basics, can be really helpful. And Jad knows a lot about, mathematical risk management. So I'll pass over to him if he's got a book.
Yeah, no, the books I read for risk management from school and everything, it's very deep into like options and a lot of things like that. But there's a very nice book about risk randomness in general. It's called Fooled by Randomness by Nassim Taleb. He used to be an options trader, and I think he turned into like a philosopher. But it's a very nice book in terms of understanding risk and the theory. It doesn't give you applications in terms of trading, but it helped me a lot in terms of understanding different types of risks and the importance in trading. Number one thing is just manage risk. Get small losses are going to happen a lot. So just make sure that they are small so that the next day you are still on your desk and you can still trade, so that when you get lucky or when the market goes up, you are there. So definitely Fooled by Randomness is one of the nice books about risk.
Awesome. Right. And I have one more. I worked with a guy in Chicago when futures was still done by humans. His name's Mark Douglas with 1 S, and his book is Trading in the Zone, Master the Market with Confidence, Discipline, and a Winning Attitude. Okay. There's some slight cringe factor in the title, but I do know that when pit traders would, want to make money and not get wrecked, he would be the consultant that they would turn to. So that's old school.
Awesome. Really good to know. So anything else you guys wanted to discuss before we sign off?
Well, I think you want to keep an eye on a couple things, right? You want to keep an eye on DXY, dollar index, right? Everybody thinks, that the dollar index, every time it goes down like 3 days in a row, everyone's like, the dollar has topped, buy crypto. And then the dollar index goes back up, continues the trend. My lesson there is trends last longer than you think. The other thing to do is watch oil. China's going to come back online. They're going to undo COVID zero conveniently in time for US summer driving season. Oil is at 113, and math work we did a year ago shows Bitcoin and oil, if oil's up, Bitcoin goes down. That's just from statistical work. So DXY and crude oil. keep an eye on that stuff because, you know, the geopolitical situation is not over. And, you know, I remember from 2000 and 2001, it was the dot-com top, then it was Enron and WorldCom, massive accounting fraud, you know, followed by 9/11. So surprises and negative events can breed surprises and negative events. And just make sure you keep stuff like DXY and crude oil and maybe TLT so you can watch US bonds. You know, don't forget about your macro. Don't fixate on it, but don't forget about it either.
Yeah, I would say, yeah, I agree with what you said, Bill. And talking about macro, I would say one of the important themes, I believe, would be that investing in a bear market or a depression, if a recession, sorry, if there is you need something that has real utility or that has real value. I believe investing in very speculative, not extremely useful assets will not be very good, especially with the macro, with what's happening on the macro side of things. So investing in things that have strong utility should be one of the top priorities, and also keeping in mind that, okay, when we had these very strong uptrend, there is a very strong feedback loop in investing and in the markets in general. When you see price start going up, you're going to see more and more people wanting to join, and it's been mostly retail people joining in this uptrend, and usually retail are, I would say, like 90% long. Retail traders not going to be shorting and things like that, so they're going to be participating in the very strong leg up. And when you see price going up, more and more people are joining. That's the feedback loop. So when you see strong downtrends and maybe a recession, the possibility of a recession looming, you can see, I believe a lot of retail traders will be exiting on losses. So there's going to be a shift in the market conditions. And I think having value plays that have a lot of utility would be very important.
Awesome. Awesome. So great advice today. I'm excited to use the market page on Token Metrics, and anybody who's interested in it, again, link down in the description. It's a discounted link. You can check it out for yourself. Bill and Jad, thank you so much for joining us today. Definitely, I've learned a lot more, and I think everybody will be very grateful we had this chat today.
All right, Randall, thanks for having us. That market page, I think, is free to everybody for this week. So definitely appreciate you having us so we could talk about that.
Awesome. Thank you. We'll catch you guys later.
Thank you, Randall. Bye-bye.